Now let's talk about the executions. The execution is let's talk about the execution. For the execution, you need you basically need first of all the maximum stop loss. To find the maximum stop loss during the execution, you need to have like 2 time frame. You need to do the time frame skipping by 2 method. Like you need to skip 2 time frame like this. So you find a stop loss, a setup on 4 hour, and then you come here and you find the entry and the stop loss at the same time on 15 minutes, right? So let us do that. Let's go on H4. Let's take this setup on H4. Now we are on H4, right? We found the setup. Let's go on 15 minutes. What you're gonna do is that on 15 minutes, what you do is you find the entry. First of all, Tenkan bend to the upside will give you the entry just right here. And the stop loss will be below this week. Like this. Right. That will be your stop loss maximum. And then you can maintain the position from there to the upside. Another option is what? You can also do this with the daily, between the daily and the H1. So let us take an example on gold. So we have 3 time frame like this: daily, 4 hour, and 1 hour. On daily, you find the setup. On 1 hour, you find the entry and the stop loss. Okay. So let us find a setup on daily. This is the setup on daily, for example. This is the setup on daily. We are on daily now. This is the setup on daily. So what you're gonna do is you go on 1 hour now. You will find you will then find an inverted Tenkan to the upside on 1 hour. Here's the inverted Tenkan on the 1 hour like this. And then you will buy the entry here, right? This will be your entry, and then this will be your stop loss. Just like this. Okay. So now in your document, what I'm trying to explain is that what I'm trying to explain in the document is that here is what I'm trying to explain. Let us take this case. Okay. On this setup, right, you realize that you have your first entry here. And then the price will move up, touch SSB on one hour. And then you have an opportunity to enter again at the same level, but inside the Tenkan Kobe just here at this level, right? The second entry, you can have one entry here, one entry at this level, and another entry at this level, right? At this point. So the reason why you have the second entry at this level is because during the transition, what I told you is that during the transition, the bottom point of the transition is sometimes Kijun in cloud plus Kijun, inverted Kijun in cloud, this inverted Kijun in cloud plus SSA inverted. That's what we have now during the transition. Inverted Kijun in cloud and SSA inverted in cloud, right? This is what we have. This is then another buy. And how you can recognize that buy is by just literally, before this buy happen, right? When you are like this, you can literally place a line. You see the bottomest shape of Tenkan, this dome, this Kobe, this curve, this V shape here at the bottom. You can literally draw a line like this. That come and touch. You draw a line like this. That come and touch till this point, right? Till the future. When the price will come back again at this level, you will buy. You can buy it. Okay. I hope you understand this one. I think you understand because Tenkan inverted is the first entry, but you can also have best entry a little bit lower at this level. That's why what I'm talking about when I'm saying Tenkan inverted, cheapest entry will be on Tenkan looking left. This Tenkan looking left, you look left like this. This is the Tenkan looking left. Okay. And now the stop loss. The stop loss will be just below this V curve, just below this V, right? Below here. Okay. Just below this V. And the stop loss is made for anti-spread. So you need to leave breeding pips of rest, breeding pip for anti-spread. Sometimes you have the spread of the broker that can kick you out if the retracement is a little bit near to the bottom of the V. If the retracement come like near here, there are sometimes it happen on Bitcoin a lot. So you leave some breathing space for the spread to not get you out. So next to that, we then have, so you need to understand that you do the stop loss with the TS2, the time frame skipping by 2 method. Now let us talk about the entry. The entry here, what I'm talking about the entry here, when I'm talking about the entry here is when I'm talking about the entry here is I'm talking about I explained to you last time that we have 3 types of time frame skipping: the TS1, TS2, TS3. The reason why we have 3 types of time frame skipping is that right? On when you have a setup on 4 hour, you go on 15 minutes and you do the TS2. The entry on 15 minutes can be at this level, right? But if you go instead on 5 minutes for the TS3, you can have a better entry. What do I mean? I mean that we have like 4 hour here, then 1 hour here, then 15 minutes here, and then 5 minutes here. When you skip 2 time frame, right, you go on 15 minutes. When you skip 3 time frame, you go on 5 minutes, right? Those 2 time frames are entry time frames. And when you do the TS3, time frame skipping by 3 on 5 minutes, you have an earlier entry than the time frame skipping by 2 method. So that's the reason why I introduced that time frame skipping by 3. Let us take again another example on 4 hour. Let us take this example on 4 hour. This is a setup on 4 hour, right? Now let us go on 15 minutes first of all. So that's the time frame skipping by 2. On 15 minutes, the entry will have been when the candle touch here, and then the stop loss will have been here, right? But if you go on 5 minutes for the time frame skipping by 3, the entry is obviously taking this one, the entry is at this candle and the same stop loss. Okay. So only using this example, what do you realize? You have two lines of entry, two price of entry. This line is for the TS2 entry, right, on 15 minutes. And this one that is earlier than the TS2 is on the TS3. Like on 5 minutes. It gives you a better entry. Okay. So what you need to understand about the time frames. The time frame, you have your setup time frame, and when you skip 2 time frame, then 3 time frame, like 2 and 3, you have the 2 and 3 are your entry time frames, right? But the time frame that is just near to the setup entry, right, is your take profit time frame. Why? Is your take profit time frame. Why? Because again, when the price moves to the upside like this, and then you enter somewhere here, the question is that how to exit the trade at the near to the end of the trend, close near to the end of the trend here, rather than coming and getting out at the bottom here, at the bottom of a pullback. The question is, how do you make sure that you exit at the top of the trend at this level? When you enter here, how do you make sure that you have a TP that is above here? You need then to skip one time frame. What do I mean by that? Let us say, for example, we have this series of time frames like this. You have the H4, you have the H1, the M15, the M5, right? And then you find the setup on H4, right? You go and take an entry on M15 and M15 and M5, right? This is your entry. But to take profit, for your take profit and holding your position, you need to skip only one time frame to the downside, like just the time frame on the left. That is just TS1 to have the take profit. Let us watch this example play out. Let us take this setup. Okay, on this setup, to enter, I'll go on 15 minutes, right? I can enter just at this point. I can also go on 5 minutes and enter just at this point. Okay, so those are the entry. Now, how do I get out of this trade at the highest point? At this trade, you can exit as soon as you see this candle just right here. Let me forget this example. Let me do another example. This trade did not represent very well what I wanted to say. Okay, let us take this example. Here is a setup on 4 hours, right? I'll go on 15 minutes. Again, you go on 15 minutes. You will find an entry somewhere here, right? You place your stop loss. Let us place the stop loss just at this point. So now let us look directly at the take profit. So you go on 1 hour. What are you looking at on 1 hour? On 1 hour, you are looking at if every time that the 1 hour thing can bend down like this, bend down like this at this level, that is where you have your take profit. A bend down of thing or of 1 hour thing can is a take profit level, right? So when you enter like this, you go on 1 hour. So what did we have? We had time frame like this. You have H4, H1, M15, M5. So those two time frames are for entries, right? The earliest entry is the time frame skipping by 3. The solid one is the time frame skipping by 2. Now, to hold the position and take profit, this one is the holding the position and the TP. How do you hold the position with 1 hour then for the time frame skipping by 1? What you realize that when you enter at the earliest point, you realize that in 1 hour, KSB play out, right? When KSB is playing out to the upside like this, that's the voluminal orientation that gives you that gives you the signal that this trade is still going to the upside. Normally, if you go on 4 hour, normally if you go on 4 hour and you want to maintain this position, you will see that you have precisely at this level, you have the Tenkan inclined to the upside, then Chike cross showing you that the volume is to the upside. Then you can maintain the position with the setup time frame and then the 1 hour. So H4 and 1 hour. So now when you want to exit the position, if you wait H4 to Tenkan H4 to bend down like this would have been your take profit for H4, but it would have been later than the H1 one, the one on H1. So it is better to take profit based on 1 hour, right? Like this. When this candle appears, it is close somewhere here. When somewhere here, it is better in terms of take profit. Okay. To exit based on 1 hour, to exit based on the TS1. That is what I'm explaining throughout this document. Okay. That's what I'm explaining throughout this document. That's what I'm explaining here at this place. So for the take profit, if you have a setup on weekly, you go and take the take profit on daily. Like for example, let us take another example. Let us go on gold. Let us take a weekly time frame. Let us say that we had this setup on weekly. This is a weekly setup. You go on 4 hour to get your entry, right? Time frame skipping by 2. You go on 4 hour, you place the entry here, the stop loss just right here. How do you exit the position? You go on time frame skipping by 1 to exit the position. It means that you could have exited the position just at this level. Just like you see this whole Tenkan going up like this. When Tenkan starts bending to the downside here, this candle that bend the Tenkan to the downside, that's your position exit. If you rely only on 4 hour, you exit your position too often. Why? Because 4 hour, as I remind you, let me remind you, the time frame that is closer to the setup time frame, this is a setup time frame weekly. The time frame that is closer to the setup time frame, like by 1, TS1 is the best for take profit. That's a take profit time frame. The other time frame, this one and this one, that is TS2 and TS3, like H4 and H1, are best for entries because they give earlier signals. But for the take profit, you need to have the latest signal possible, the latest signals possible. That is why when the market is moving to the upside like this, right? If you have entered here at the bottom with TS3 and TS2, to exit, you should not wait TS2 again. You should wait the trade to match with TS1, right? You should not go on the setup time frame, but TS1 will be the best one, skipping only one time frame to the downside. All right. Okay. So now the reversal entries are more of the reversal entry are more of what I explained to you the last time. They can hit VAS and they can rebound. Like you already know them. I will not do that again. You know, they can VRS, and they can rebound. You know those two. So now let's talk about the elite POV, point of view of Vegeta Ishimoku cycle. Elite point of view.